All right, let's dive into one of the most fascinating business stories in recent memory, Uber versus China. We're going to break down the anatomy of a high-stakes corporate showdown. Let's get right into it. So here's the big question, right? Uber is this global behemoth. They pretty much conquered the world. But when they got to China, one of the biggest markets on the planet, they hit a brick wall. How on earth did a market leader like that end up retreating? Well, that's exactly what we're going to unpack.
Okay, Act 1. To really get what happened, you have to picture Uber at this time. They were an absolute juggernaut, just rolling out their global model, country by country, city by city. It honestly felt like nothing could stop them.
And this is where the story really gets interesting. See, on one hand, you've got Uber's global playbook, a one-size-fits-all model that had been incredibly successful everywhere else. But on the other hand, you have China. And China was, well, it was different. It had its own rules, its own culture, and as Uber was about to find out, its own hyper-aggressive local competitor called Didi.
So let's talk about Didi. This wasn't just some other startup with a ride-sharing app. No. Didi had what you'd call an insane home field advantage, and it was about to change the entire game for Uber.
So what does home field advantage actually mean here? Well, for starters, Didi just got the local users better. They knew people might want to pay with cash, for instance. Then, and this is huge, they had tight relationships with the government, which is absolutely critical in China. But maybe the biggest thing, Didi was woven into the very fabric of Chinese tech. It was built right into apps like WeChat and Alipay, apps that people use for literally everything. It was a cultural lock-in that Uber just couldn't replicate.
Which brings us to Act 3, the billion-dollar war. So Uber, faced with this massive local challenge, makes a fateful decision. They don't pivot, they don't adapt, they double down. They decide to fight fire with fire, igniting an all-out, incredibly expensive war for market share.
And this war was fought with one primary weapon: cash. Cold, hard cash. Both Uber and Didi started burning through billions of dollars to subsidize rides, making them ridiculously cheap for customers. You know, this wasn't about who had the better technology anymore. It was a pure battle of financial endurance. Who could bleed money the longest?
And the numbers here are just mind-boggling. To give you some perspective, at its peak, Uber was losing over $1 billion a year in China. Think about that. Over $2 billion in total, just gone, spent on trying to buy a market that just wouldn't be bought.
And this chart, this says it all, doesn't it? Sure, if you look at the left, market share was going up. They were getting more riders. But look at the bar on the right. The financial losses weren't just high, they were astronomical. They were winning users but losing a fortune on every single ride. It was completely, utterly unsustainable.
So that brings us to the final act. Something had to break. You just can't keep hemorrhaging money like that forever. And this forced Uber into one of the biggest pivots in modern business history, a strategic retreat. But look, this wasn't just Uber waving a white flag. No way. This was a calculated strategic move. First, they finally had to admit to themselves that the price war was a black hole for cash. Second, they acknowledged that Didi's local advantage was just too strong to overcome. So they cut a deal. They sold their entire China operation to Didi, and in return, they got a big chunk of equity in Didi.
And honestly, this move was kind of brilliant. In one fell swoop, Uber stopped the bleeding. That $1 billion a year loss? Gone. But even better, they turned a failing business unit into a really valuable asset. By owning a piece of their biggest rival, they ensured they would still make money from the massive Chinese ride-sharing market, even after losing the fight.
So, after all that drama, what's the moral of the story? What's the big takeaway from this whole incredible saga?
It really boils down to this single, powerful idea. Just because you're a global champion doesn't mean you can win everywhere. And sometimes the smartest move you can make isn't to fight to the death, it's to make a strategic exit and turn a loss into a win. Which leaves us with this final thought, and it applies to so much more than just ride-sharing. When is it smarter to join forces with a rival instead of trying to crush them? The story of Uber and Didi in China teaches us a masterclass in the difference between just winning a battle and actually winning the war.